Hey everybody, this is David Skarika. So just a quick update on a couple things here. Firstly, we're going to start with my new website. So we tried over the weekend um so this is the new website. I did kind of like that old video I had up there, the little it was like looked like the ocean, or whatever, like trees in the ocean, but like what we did is it's this pretty nice, still nice clean website. That's all my books there. So yeah, if you want to pre-order my book, by the way, there it is right there. But so what we're doing is we tried to do what's like a data dump. So I tried to move everything over from addictedtoprofits.net to profit to pessimism, and it didn't work. We had an issue with the login page. So not your login page, but my login page to to do the future updates and stuff. So then we just redid the website, and Addicted to Profits is kind of screwed up right now. So there's no real, so all new members updates for the time being, all the written members updates, I will just put in emails as text. This will only last like a week or so, just so you know. And then all the video updates, I will just send you the private link because I do private videos on the private uploads to uh YouTube. So just bear with us. That'll happen another week, and then what I'm going to do is manually just for the last 2 years all my updates. I'm just going to manually update all the members updates that I've done for 2 years to the addicted to the profit from pessimism site. I'll probably do actually manually update everything, including the free ones and the members updates, et cetera, et cetera. So, like I said, please bear with me on that. I'm sorry about that. But the new website you can see is much cleaner, et cetera. So just these things kind of do happen, right? And the nice thing about making like how my newsletters turn into kind of more media orientated is you can go just on YouTube to look at old videos. I can just, like I said, I can do the private links. And obviously, I ask the paying members that the private links, because as if someone has that private link, anyone can link on it. You can't see it on the YouTube page. So any paying member would ask not to, share that private link with anyone. I don't think anyone will, etc. So, because you already can do that. Like when you clicked on the video and watched it on YouTube, you could always do that anyhow. Anyhow, so now we have more chaos because of this. One thing I was going to show people, what I highly recommend is I was just watching. I sit there and you can see you can see what I kind of watch on YouTube. A lot of like travel vlogs, food vlogs, this kind of thing. There's some stuff on Joe Rogan and Musk, and some of the videos. This is like one of my favorite shows, best ever food review show. I like it excess. There's from some videos from when Barstool visited me in the Bahamas. So yeah, these are the kind of things I watch. You can see, et cetera, et cetera. And what you can see here, though, is I'm going to show you my history. And I've been watching. I watched this really interesting documentary, and this is on what happened to the Trump Taj Mahal and what he did to his companies in Las Vegas, and it's really, really interesting. Because I knew obviously he had these bankruptcies, but I didn't know he was as reckless as he was. It's kind of scary actually, in a lot of ways, considering what's going on right now and all this volatility in the market. So, I don't know if I'll put this link up, but I highly recommend it. All you have to do is type in like what happened to the Trump Taj Mahal. Actually, I should like this video because I really enjoyed this. It's something called La Brise TV. So just something working at, worth looking at. And as recently as 2024, he was still having bankruptcies due to these properties. It wasn't just like, remember, it's kind of like portrayed that, oh, he had all these problems in the early 90s when himself almost went belly up. But really, he did it. He moved all the rest of the corporations, but he was still having a bankruptcy as recently, as over 20 years later after his like kind of like first bankruptcy. So it's kind of crazy. So we're looking at the S&P here, and you can see that ever since the S&P kind of bottomed in like late 2022, early 23, so I'm in this pretty strong run. This is actually the spiders. And we'll actually look at the SPX too. And you can see this run. And other than for like a few weeks in late 2023, we've held above the 150-day and 200-day moving average for the most part. So we're right at the 150-day here. Now, Hugh Henry is a really smart guy. He used to run a hedge fund. He's got a very interesting. I highly recommend his Patreon. It's $25 a month. His takes are very good as well. And by the way, that's another thing I'm going to be adding to the member section. I'm gonna have another series called Macro Musings. And Macro Musings is kind of gonna be like my big picture thoughts, not stock picks, this and that. I'm actually gonna kind of talk about some of these Trump bankruptcies in my recent Macro Musings. Sorry, my new Macro Musings. And this is not gonna be a planned thing. The Macro Musings are gonna be when I see fit. Like if things are hectic, there may be three in a week. If nothing's going on, there may be none for 6 months. But that's going to be kind of it. It's going to be a written update, not videos, and it's going to kind of be my big picture thoughts, like I said. So Henry says that the line in the sand is kind of 5,700, which makes sense. It's essentially the low in early November, right before the election, and then kind of the low is just above that here in um, here. And 5723 is also where the 200-day moving average comes in. And right now, the 150-day, we're right at that here today. So if that happens, now the question is, will we be oversold by then? You can see the VIX is already up to 23. And, that was very extreme here. And you see, and during this sell-off in December, the VIX got to 27, 28. So the question is, do we just see a few percent downside in the short term due to these tariffs and the S&P kind of bottom? And like the thing is too is, we can't, maybe this is a topping formation here, but sometimes these topping formations, like if we go back to 2007 or 2000, let's just actually do that just out of interest, right? We're going to show you 2007, what 2007 looked like. Like that topping formation happened almost the whole year, right? In 2007. So these were the big bear markets. I'm not talking about 2018 or 2020 when the market drew down for a few weeks, a few months. And you can see this big topping formation, which actually lasted into early 2008, where it was about 1350 to the downside and about 1560, 1570 to the upside in the S&P. So really, if you take it from this little correction low here, which happened in April, March, this took essentially over a year. Like we'll go look at 2008, and I'm not going to go into the crash, but I'll show you like again the topping formation, and you can see even though the market even went propped here, but really it broke that January. So this happened. That topping formation was basically from March till about December. It took 9, 10 months. So and then again, if we look at 2000, it's the same way. Now you can have you can have uh a correction here. You can see this sharp correction in 2008, but same kind of thing. Here's the March top of 2008. Here's this, and actually you can see our 2000. You see that's you can see that's into the summer, and then we kind of broke here in October, had that last rally up, and then broke down. So again, same kind of thing. March to about November, October, November. That's 7, 8 months. So that's again. It's not saying that we're going to roll over right away. We've already, if we have started this current topping formation, we would have started it. We're going to go back here. We would have started it, and just recently, in about, December last year. So December last year till now, we're only, basically 2 to 3 months into it. So this could last maybe into the summer, right? And like, there's still going to be some pro growth policies that come. And you can see, I always hate shorting anything. I would not short here. See, the RSI is now as oversold as it was since actually this correction that happened last summer. So, you can see these last two times the RSI got to, this level here in the low 30s, there were very good rallies afterwards. So let's see what happens in the oversold condition going forward. So I still think we can see a bounce. Now you're just seeing the knee-jerk reaction to the tariffs, et cetera. But I just think this is like chaos, and like like you can disagree or agree with some of the stuff that Trump is doing. I agree with some things. I don't agree with some other things. But I just think actually in the end the problem is the chaotic way is being done. Is I think there's a more proper way to doing it, right? Like if you really want to bring back manufacturing to the US, I don't think doing all these tariffs is really the way to go, especially the way car manufacturing works, where certain parts are assembled here and certain parts are assembled there. It's just very difficult to try to do that. I think you really just have to make pro-growth policies, cut red tape, maybe have like tax holidays, say, any company that moves, whatever, an auto plant or a semiconductor plant here doesn't have to pay tax, corporate tax on the profits they derive from that plant for 20 years or something, like I think that's kind of the way to do things. And I think you'll track investment and, not just like putting tariffs here and there. And like some of the tariffs, in my opinion, are nonsense, like the Canadian tariffs. Okay, you can say it's about fentanyl, which is fair enough. But a lot of the Canadian tariffs, it's like he's saying Canada, because Canada has a trade surplus. Canada only has a trade surplus because they export oil, which U.S. needs. and then it's refined in the US, right? Where if you took the oil out, the US actually has trade surplus with Canada. Um, because a lot more products and during the winter months, Canada can't exactly make its own produce, so a lot of fruits and vegetables are imported from the U.S. as well. So there's all these other factors as well. I'm not getting into like the thing on trade, So, but anyway, I think actually you could say maybe even started here, but for our argument's sake, I say it could be early December, which means that we got basically we're about 3 months into this. So I don't know if this would be this. I would say that 5,700 is a pretty good line in the sand because that's essentially these little lows here that happened in September and here. And then after that though, even if it broke to 5,600, I think you'd get a rally and a lower high, and that would probably be where I would myself, if that happens. I don't know if that's going to happen. That's where myself personally, that's where I would want to say really exit all my long positions and start getting short, etc. And because of this topping formation looking like this, it's not a parabolic curve, it's not straight up. If we go look at again, let's go look at another bear market. Let's go look at 2022. It's kind of like the 2022 period. You can see when the market was topping here from we'll go back to late 2021. So we see this top here. You could argue here this top was again from about November till about March. And again, notice here that breakdown, and then that rally in March was the time we got out, and you can see that it's time to get out, and you can see that 4,600. It was only 200 points lower. You got out within 5% of the highs if you had done that, right? So I would think that if this is a shorter term top, it's something like 2021, where maybe we're here, we're right here, where we were in 2020, early 2021. And then, you can see there were a few rallies that you could have got out on during that time frame. So that's kind of where we are. That's why I'm not in a big hurry to change my stance. And remember, most of the long positions I have right now, as you know, those of you who are members, are very conservative, high dividend playing stocks or turnaround plays. So it's kind of like the thing about these turnaround plays is like one of my turnaround plays has been hit very hard in the last month during the sell-off, but it's got its earnings coming out over the next few weeks. And if the earnings are good, that stock can easily rally at 50 or 100% and then kind of trade on its own, So that's the thing about these turnaround plays. They're so cheap. They don't necessarily, and these stocks have gone down, some of my turnaround plays, 80, 90%, even with this huge bull market in stocks. So, they're not necessarily dependent on that. So I think I'm just going to leave that at now for today. I hope you all enjoyed this. And I'm about to do my members update as well, where we'll talk about some of these positions I talk about. So everybody take care. And I hope you enjoyed the video.